Bitcoin has broken out to another new 52-week high, leaving traders and investors excited about the potential for another round of explosive gains. But not so fast. This time the breakout was different than the last time. Major volatility has been an issue over the past week. In fact, on January 3rd, Bitcoin tried to break out from a multi-week base and failed to break out, selling off sharply all the way down to its 50-day moving average. Only 4 days later, though, broke out and actually held the breakout this time. So it's been difficult for a lot of investors and traders to stay with their positions over the past week because of market volatility. Now, if this happened to you, don't worry, help is on the way, because in this video, we're going to share with you some key trading insights to help you stay with your positions in a volatile market, and also share some key trading psychology insights that can help you in your trading as well. And be sure to stick around to the end of the video, where we're going to share with you a key indicator you can use to help you time your Bitcoin entries more efficiently, and also to help you know when the altcoin market may be setting up to take center stage. I'm Darren Wagner, here with over 20 years of trading experience to walk you through the charts. But before I do, don't forget to push the like button and subscribe and ring that notification bell to receive more great content like this. Let's dive in. Now, overall, we can see that Bitcoin has been in a steady uptrend since mid-October, when the price broke out above the consolidation and we scored a 40% gain on this first move up on a multi-month swing trade. And since then, the market has been trending steadily higher. Notice how the 8-period EMA is held above the 20-day EMA the whole time. No crossovers. That's a sign that the uptrend is still intact. And also the 50-day moving average steadily higher, with only one touch of it, which is key. And we're going to talk about that here shortly. So we do see that Bitcoin is definitely in an established uptrend, we could say bull market, since mid-October. And what I'd like to focus on now is zooming into the more recent price action, and want to look at this consolidation base here. So what we have is when a market runs up and has a big rally, thereafter, after a big rally like this, we either get one of two things that typically happens. You either get a correction by price, which is known as a pullback, or we get a correction by time, which is also known as consolidation. And of the two, consolidation, a correction by time, is more bullish because it indicates that the sellers are not stepping in as soon as the buyers take a rest. And that's what happened here. After December 5th, we entered into a consolidation that lasted actually for about a month. And that's ideal because the best price consolidations typically last at least 2 to 5 weeks, forms a base of support from which the breakout to spring from. See, when you've got a breakout without much of a base of consolidation, the breakout's more likely to fail and the price come back into the range. But the longer the consolidation period you have before a potential upside breakout, the greater the chances that the breakout will stick. So that's important that we had this, 4 to 5 week consolidation here. But over the past week, certainly the crypto market has been keeping people on their toes, no doubt about it. And I want to talk about here specifically on January 3rd what happened. And we can see on January 2nd, we had a breakout attempt where Bitcoin tried to rally break out above the high of its consolidation, which was nearly 4 weeks long at that time. And the price broke out briefly intraday and rallied all the way up to a high of 46,000. But notice how this inverted candlestick, you can see that wick there. That means that the breakout failed. And the very next day, the price came back into that range. Now, when you've got a failed breakout like this is a warning sign. And we always tell members of Morpheus Crypto in the chat room, we say, when we see these failed breakouts, you got to be really careful because what happens is, from a psychological standpoint, if you understand what's happening when these failed breakouts occur, you've got everybody who bought the breakout in anticipation of new gains gets trapped. And then when the prices start to head lower, they're trapped at a higher price and they immediately start to sell, which attracts other sellers, and people get nervous and it just kind of builds on itself. And often these failed breakouts lead to a sharp move lower within a day or two after. So that's why it's important to have tight stops when you're buying breakouts, because if the breakout fails, you want to be out quickly, and then you can always look for a potential re-entry. And let's go ahead and zoom into the 4-hour chart so we can see a little closer here what happened. So here we see the breakout attempt briefly above the 44,700 mark. Okay, you can see there above that. Held above it for about 1 day and then slid back below. And notice how once we broke below that breakout level, look how fast the selling picked up. And that's what I mean about failed breakouts. You can see the selling momentum really picked up once that breakout failed. And not only that, it continued all the way down took out all of this range and undercut the prior lows of the consolidation, undercut this level here, and basically tested the lows of the consolidation here. So we didn't actually break the low of the consolidation, but we broke the prior low within the consolidation period. And most notably, if we look out at the daily chart, we can see here that on the daily chart, the low of that day perfectly touched the 50-day moving average, that red line. That's really important because the 50-day moving average is known as the line in the sand when it comes to uptrends. When you're in a healthy market and the market's trending steadily higher, you wouldn't want to see prices go back below that 50-day moving average because that's a sign of intermediate term trend. And in a healthy bull market, typically when you're rallying higher, eventually we're going to have a pullback that touches the 50-day moving average. And in a healthy market, that first touch of the 50-day moving average within the uptrend is often a relatively low risk buy point because that's a signal often to institutions to buy as well because it's a pullback entry. So very, very positive signal for the market that we touched that 50-day moving average and immediately reversed higher. You can see how the buyer stepped in right on the touch of that 50-day moving average. After the big sell-off on January 3rd, prices snapped back above the 50 MA on the 4-hour, as well as the 8 and 20-day EMAs that we showed you. And the price action entered into a volatility contraction. Notice how for several days, although it was choppy, the price action tightened up. And that volatility contraction is important because it sets the stage for a potential breakout, which actually came on January 24th. So on January 24th, notice that we made a second breakout attempt above the consolidation base, and this time the breakout stuck, and we broke out in high volume. Now, needless to say, just yesterday, we got some crazy action again, where within this consolidation after the breakout, we briefly had a spike up to 48,000, and I'll tell you why that level was resistance here shortly. I'll show you. That was no surprise for us. And then we actually had a pullback all the way down, big sell-off. Let's go ahead and zoom into the hourly chart so you can see. Big spike up and then came all the way back down. But look, check it out. Look where that low of yesterday's spike held. The low held that breakout level, okay? And that's really important because that shows that the breakout has stuck, at least so far. That was a successful test of that breakout level right around 44,700. This is a great example of what we always remind everybody, that the most important element of technical analysis is to remember that a prior level of resistance becomes the new support level after the resistance is broken. That's exactly what happened here. This was resistance for many weeks, right? For about 5 weeks, this was resistance. Now we broke out above it. And now on a pullback, that resistance has become support. So moving forward, quite simply, we want to see Bitcoin in the coming days hold above this 44,700 level. That's the level to watch, okay? If we hold above that, then Bitcoin can potentially build another base and set the stage for another rally, another leg higher. But if we come back below that 44,700 breakout level, then it could get ugly again, potentially with another test of the 50-day moving average. So that's the level we want to keep an eye on here in the coming days. If you're looking for an entry in Bitcoin that you're not in right now and you're looking for an entry, then any other pullback to near this level is a relatively low risk entry point, especially if you set a stop, set a stop about 1,000 points lower so that if you're wrong, the breakout doesn't hold, then you're out pretty quickly. But if you're right, you have a good risk reward to realize profits. And this leads me into my next point, and that is about the psychology of re-entering trades. This is really important, especially it's really timely and relevant considering the price action of the past week. When I was a new trader, if I bought a breakout, for example, and the breakout failed, I'd have my stop in place and I'd get stopped out. That's the right thing to do, obviously, because you don't want a small loss to turn into a big loss when you're wrong. So you got to use stops. But when I'd stop out, what was really frustrating as a new trader is I'd stop out and then sometimes I'd see the price reverse and rally and rip higher, which was my original idea. But this time I'm not in it. Boy, that can be frustrating when it happens. Has it ever happened to you? Leave a comment. Let us know if that's ever happened to you. Certainly, when I was a new trader, it happened a lot. But I said it happened as in past tense because I learned how to master my trading psychology so that never bothered me again. And here's what I want to talk about. And that is that if you get stopped out of a trade, don't be afraid to re-enter the trade if the trade is still valid. Let me say that again. If you stop out of a trade, but your original idea was right and the trade's still valid, then you got to re-enter the trade, even if it's at a higher price. I know, I get it. Psychologically, it's tough. If you sell something at 41,000, for example, it's tough to buy back in at 43,000 because you feel like, wow, I should have been in at a lower price. But what happened to me all the time when I was a new trader is I'd say, well, I don't want to pay $1 higher. I don't want to pay a point higher to buy this because I was in it at this price. And then instead of that 1 point I tried to save, then I watched the price go up 3 points, 4 points, 5 points, 10 points, all because I was worried about trying to save 1 point, and I was upset because I didn't hold it. That's dumb. It's a bad idea. It's a losing idea, and I don't recommend you do it because each and every trade is independent of the previous trade. The market doesn't know and doesn't care if you're in what price you're in before, and it's completely irrelevant. So once you exit a trade, that trade is history. It goes into your trade log, and that's it. And now it becomes a brand new trade setup, new trade scenario, and you shouldn't have your current trades you're looking at entering your past trade results shouldn't have any bearing on any current trades that you're considering entering, because each and every trade is independent of the previous one. Get that in your head. That's really key. Now, last thing is, don't confuse this with revenge trading. Okay. Revenge trading is a different animal. Revenge trading means you stop out of a trade, and even though the trade still looks bad, it's going lower, you get back in it for no other reason other than to get even. You want to make your money back in that trade. That's a bad idea. Don't do that. That 9 times out of 10 will lead to greater losses. So what I'm referring to is if the trade setup is still valid, meaning that maybe your timing was just off, you're a little bit early, but the trade setup looks good. Would you get back in? Yes. Okay. But if it's, again, just don't confuse that with revenge trading. The question I like to ask myself is, if I wasn't already in this trade now, knowing what I know now, would I still get in this trade? And if the answer is yes, then get back in the trade. And if the answer is no, then you stop out and look for something else, look for a better opportunity. All right. So that's just a little bit of a rant there on trading psychology, but it is very powerful to understand and master your trading psychology. We've got a lot of information on our blog about trading psychology if you want to check out morpheustrading.com/blog. By the way, let us know if you'd like to have more content where we talk about trading psychology. We've got a lot of great insights and tidbits over the past 25 years of my trading experience where I can share with you for trading psychology. So drop a comment if you'd like to hear more videos about trading psychology. So we talked about where to buy Bitcoin if you're not already in, potentially a pullback here. So of course, if you are in, you want to have your stop not much below this level. Now that we've broken out above it, we're going to be raising our stops here again soon with our position that we're holding in the Morpheus crypto portfolio. And I talked about the 48,000 level stalling yesterday, and that's not surprising because if you've been paying attention in our last crypto video where we talked about Bitcoin breaking out to a new high, in our last video, we said there was resistance up here at the 48,000 level, which was resistance of the March 2022 high. And that was kind of a swing high resistance there. So we told our members of the chat room yesterday, we said, hey, if Bitcoin breaks out, look for potentially taking some profits near the 48,000 mark because that's resistance. And that's exactly what happened. We spiked up almost to exactly 48,000 before pulling back and closing a little bit lower, but still holding above the breakout level. So that's a key level of resistance, 48,000. Now we're still holding our position because we like the price action and volume of Bitcoin. So we're looking to hold through any potential pullback. Ideally, what we'd like to see happen now is for Bitcoin to continue to trend higher, but not at a steep angle. It's trend higher, form a consolidation for 4 to 5 weeks, then make another leg higher. And that's exactly what happened here. We had 5-week consolidation we broke out from this week. That's really nice. 5-week consolidation. Notice how we held the 8-week moving average, but we may not be able to get above this resistance level at 48,000 without a little bit more consolidation and price action. But we may not be able to get above the 48,000 mark without a bit of a correction, either a pullback or a consolidation by time. But of course, this is crypto and anything is possible. Now, what about that news about Bitcoin's spot ETF potentially getting approved by the SEC? Well, today, January 10th, the SEC is scheduled to give their decision on whether or not they will approve a spot Bitcoin ETF. Now, regardless of the decision, yes or no, expect high volatility in Bitcoin. And also, if you're new to trading, I want to warn you, don't necessarily expect the price to go up if they do approve spot Bitcoin ETFs, because often what happens is, you may have heard the saying before, buy the rumor, sell the news. And that could be the scenario here. We could be seeing a rally in Bitcoin over the past month or so, past 2 months, in anticipation of that spot Bitcoin ETF getting approved, which means we could see a negative price reaction on approval. We may see a sell-off. So be prepared for that. Don't necessarily expect prices to go up. Often we get the opposite reaction. Now, what's our opinion? Well, here's the beauty of the Morpheus trading strategy. We don't care. We don't trade the news. We don't make decisions based on news. We don't trade rumors. We don't look at social media. We trade the charts. We trade what we see, not what we think. And over the past more than 2 decades of teaching our winning trading strategy to traders, we always emphasize the importance of trading what you see, not what you think. That'll keep you out of trouble and prevent you from getting sucked into the wrong side of a potential news reaction. Just everything you need to know is shown right on the chart. So we let the charts be our guide and make our decisions for us. Now, last thing I want to show you with Bitcoin here is the Bitcoin Dominance Index, BTC.D. Bitcoin Dominance Index is an index that tells us what percentage of the overall cryptocurrency market cap is comprised of only Bitcoin. So, for example, as this index is rallying, it means a greater percentage of total cryptocurrency market cap is going into Bitcoin. As this index is dropping, it means that Bitcoin is comprising a lower percentage of total cryptocurrency market cap. So another way to look at it is if this index is rallying, it's bullish for Bitcoin, maybe not so good for altcoins, and vice versa. If Bitcoin's dropping, it may mean that Bitcoin's kind of stagnant while the altcoins are rallying. So we use this indicator as kind of a confirmation indicator along with the price of Bitcoin. And what's really interesting here, take a look at this chart, which shows Bitcoin on the left and the Bitcoin Dominance Index on the right. So you can see the correlation. And here we can see this is when the Bitcoin Dominance Index was moving lower. Notice how you can see the line, the vertical line on the left chart also lines up. Bitcoin was just going straight sideways in a tight sideways consolidation while Bitcoin Dominance Index was going lower. And if you take a look at Ethereum, you'll see that altcoins were rallying during this period. And then we got support. And then Bitcoin Dominance Index found support, started to rally, and that's what sparked the breakout. You can see right here on January 2nd, the breakout attempt, the first breakout attempt to Bitcoin, then the sell-off. But then again, that Bitcoin Dominance Index continued higher, which eventually pushed Bitcoin to break out to a new 52-week high. Now, what I wanted to point out, though, is that notice how Bitcoin Dominance Index is running into resistance. We've got the 52-week high just above. We've got a prior high at the current level that we probed above yesterday. So this area between 54 to 55 is significant resistance in Bitcoin Dominance Index. So we can see today we're starting to get a pullback in the Bitcoin Dominance Index, which unsurprisingly means that we're now seeing relative strength shift to Ethereum. Ethereum now is poised for a potential breakout to a new 52-week high, and we'll do a separate video on Ethereum and altcoins coming soon. We're going to review what's up with the altcoins, the hottest altcoins in the market, what's setting up for potential trade entry in the coming days as well, now that momentum is shifting from Bitcoin into Ethereum. So keep an eye out for that video. Again, keep in mind 48,000 is resistance, so got kind of a narrow window there. You might want to keep your position size small unless we would get a breakout above the 48,000 level, and then then we could be off to the races once again. But a little bit of caution is in order here in the near term. One likely scenario is we may see Bitcoin just kind of go sideways, form a base on base pattern, while we see Ethereum and the altcoin market catch up. And again, look out for our video coming on that soon. We hope you found this video to be insightful and helpful in your trading decisions. Head on over to MorpheusTrading.com and click on Crypto Picks to receive our top crypto swing trade alerts sent to you real time every day with our exact entries and exits.